Welcome to the latest Motley Fool scoreboard. I'm on a chocolate balloon. We've got longtime fools Dan Kaplinger and Jason Hall giving a 1 to 10 rating to a Moneyball rec. It's Globant, ticker symbol GLOB. Rate the strength of Globant's business first, including factors like industry, competition. 10 is invincible. A 1 is hopeless. Dan's at a 7. Jason, you're a little lower at a 6.
Yeah, I think its focus on AI should pay off in the long term. But right now it does certainly feel like a risk and a threat. And it plays out a little bit in the numbers because we've seen margin deterioration and the balance sheet weaken over the past few years. And that does have me a little bit concerned, even though there's some great things about the business, where they're focused, if that pays off, and the fact that they've had the person that founded the business running it for 2 decades.
Yeah, I totally understand the concern there. I just think I'm maybe a little more patient with them going through kind of a rough patch, and that's why I'm giving them an extra point here. Look, being tech forward in consulting right now, it's kind of where you need to be. You risk being left behind if you don't do it. And Globant's made a big pivot towards AI with kind of this unique AI pod model. It's kind of an interesting thing. It is had its impact on financials for sure, but it's still early in the process. So I'm curious to see how that pans out in terms of how clients like it and whether it's able to get its growth mojo back at some point in the near future.
If you're looking for higher business scores in consulting, when we did Accenture recently, both Jason and Dan gave that an 8. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Once again, Dan's at a 7, Jason, you're at a 6.
Yeah, I'm probably going too low here. If you look at how the business has really been a winner, revenue is up like 20-fold since the company was founded. It's a recognized global name in tech consultancy. But here's the reality of where we sit today. The stock is, since IPO, so that's 2014, is underperforming the S&P 500. And at some point, you do have to weigh the results for shareholders. And that's the reason I came down as a 6. I think it's an above average management team, great founder, leader, but you're not delivering the kind of returns for investors that you would expect for a business like this.
Totally justified. I think Martin Migoya, he's had a good success story. I think really now looking forward as an investor from here, looking ahead, the real question is Migoya going to be able to navigate through this tough patch and help that business recover, kind of move forward with the optimistic view that he expresses in every shareholder letter, very much behind this digital transformation that the company is going through. It just needs to pan out. If it pans out, then things will be great. If it doesn't, then we'll be looking to Migoya and asking, okay, what happened here?
For financials, a 10 is a fortress, a 1 is yikes, 6 is for both of you, Jason.
Yeah, none of the trends are great. None of the things you want to see with margins, revenue growth, cash flows. I'm optimistic, though, that I think they will revert in the next couple of years to what we saw in the first 10 plus years of the company's existence. The balance sheet is fine. I think that's as much as you can say about it. And it's not a strength. And I would certainly give the company a higher score here if the balance sheet was a source of strength when it was going through this tough period of change and disruption.
Yeah, I just can't give a company better than a score of 6 when revenue is stagnant, when you're seeing falling profits. Yeah, sure, they've got steady cash flow, so I'm not terribly worried about debt being in excess of cash on the balance sheet. Agree with Jason, the balance sheet's fine. It's just not all that great. It's not hugely attractive, and so score of 6 seems to make sense for me.
Yeah, I mean, a 6 might seem bad, but I mean, it's above average, but that's the best you can say about it.
All right, Dan, let's talk valuation. How will Globant stock do over the next 5 years? How safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, I'm giving it basically market performance 5 to 10% over the next 5 years. Safety score of 5. Look, I'll be the first to admit the stock's due for a bounce. And again, if Migoya can kind of show results from this AI pod transformation, I think that they're going to get that stock price bounce. But in the long run, I think the question is Is Globant going to gain more business from its AI-related transformation than it loses from clients who decide they're going to go on their own or go with some disruptive, smaller companies, AI-powered models? McGoy has a needle to thread here. You have to encourage AI innovation. You have to make sure Globant captures more and more of that recurring revenue, not losing it to disruptive competitors.
Yeah, I guess if there was a single sentence to describe where I stand on it, it's optimistic but not convinced. So that's why I think we could see 10 to 15% annualized returns, could be even better than that. But my safety score is a 5. So it's not a totally binary outcome. And I think the next couple of years are really going to prove out whether Globant is a player in disruptive tech or continues to get disrupted.
Thank you to both Jason and to Dan. They've given Globant an overall score of just 6.1 out of 10. For topics, Dan prefers the aforementioned Accenture for stability, and he prefers Kyndryl for high risk, high max return. For Jason, Endava's the topic. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is something good, I promise. Till then, Fool on.